Hello, guys. Welcome to the show. Listen, I'm glad to have you guys here. This is Thursday, February 21st, 2019. Let's get right started. The first thing we're going to talk about is the Federal Reserve. And we'll get right in there, and what we'll do is open up the charts right here. And let's take a look. The FOMC Minutes are out now. And this is what they talked about. They talked about being flexible and managing the process of balance sheet normalization. And here's the main key talking points. They use the word flexible. In other words, they have to be flexible. So they basically what it amounts to is oftentimes when you get a hurricane and it has really fast forward speed, it means it's going to go in that direction very clearly, which direction it's going in. But when a hurricane slows down its forward momentum, it's getting ready to turn, either to the left or to the right, or change directions. That's what the Fed's doing right now. They're slowing down their forward momentum, and they're talking about turning or changing directions depending on what the economy's doing. It says participants agreed that it was important to be flexible in managing the process of balance sheet normalization. It would be appropriate to adjust the details of balance sheet normalization plans in light of economic and financial developments. Okay, what that basically means is they're going to wait and see what happens in the economy, in the general economy, to know which way they're going to turn, whether they're going to tighten or they're going to loosen monetary policy. That's basically what they're talking about. It says the U.S. economy forecast prepared by the staff for January at the Federal Open Market Committee meeting was revised down a little, on balance, primarily reflecting somewhat lower projected paths for domestic equity prices and foreign economic growth. So they're not seeing much growth in the emerging economies. And also, they're primarily, I think they're talking about China. And there is no I think China personally is shrinking. It says members noted tightening financial conditions and uncertainties. Uncertainties. See the way these people talk, but basically the uncertainties are things like the Brexit, the slowdown in China, Italy's debt problems, and so on. These are the uncertainties they're talking about. It's making them very nervous. And they're starting to think about actually cutting back on their quantitative tightening program or even stopping it altogether. So we're going to have to wait and see what happens with the Fed on this. This is what's going on right now. These policymakers in the Fed are starting to have second thoughts about what they're doing in their actions because they admit now that they probably caused the volatility in the markets that we've just seen recently. So let's take a look now at the silver price. What we're seeing today is a drop of 13 cents, but it hasn't really went below the range that the new range it's found itself in. It's up around between say $15.90 and $16. It's still in that area. It's at $15.69. Let's check gold here for a second. Gold's at $13.34. It's down $3.60 today. $1,334. Now we're going to take a look at Bitcoin. And you know, Bitcoin was on a bit of a tear, and it's holding its gains it made. In fact, if you plot the position from the upper part of its gain when it first went up to where it is now, it's actually very slightly elevating in price as it's going along. Like it's not only holding its gain, but it's slowly creeping upwards, very, very slowly, albeit up and down, but it's creeping up. It's been creeping up. So basically, it was around 38.70 when it made that final. When it went up to where it was going now, like it went up to 38.70, and now it's at 39.02. So see, it's creeped up all day long. It's been creeping up just a little bit. Now let's take a look at cryptocurrency market capitalizations. $133.5 billion with a Bitcoin dominance of 52%. And what we're looking at with these coins is that they're holding their own, even though they're all down in the red slightly. Still, they're holding their own. Litecoin has just fell below $50. It's $49.20 right now. that's one of my favorite coins. Ethereum, $145.72. Actually, that's actually nice, to be able to buy a whole Ethereum for 145 bucks. Because there might be a day in the future where one Ethereum costs more than a Bitcoin costs now. I mean, that's not out of the question. So let's take a look now at the Dow Jones. Let's see, is it open yet? No, we got one more minute. So let's take a look at oil. Oil is at $56.88. It's down 28 cents on the day, or half a percentage point. If we go back and we take a look a bit at the longer term chart, let's try 6 months. Will it give it to me? I hate it when the chart doesn't change over. Let's try 1 year. There's a year. Okay, we see it made a high back here on the 10th month of 2018, the third day. It made a high of $76.20. And ever since then, it made a low. The low was at December 24th, made the low. And now it's been creeping back up, ever since December. Oil price has been creeping back up, and it looks like it's still creeping back upwards again. But now let's go to the Dow, and we should be able to get it now. It's so far we're starting the day 39 points down, 0.15% down. So we're looking at 25,915 right now, and we're 39 points down on the day so far. Let's take a look now at bonds. We're seeing the bonds, all the yields are climbing except for the short, the 3 month. 3 month is fallen, but only marginally. But we're seeing quite a little steep climb in the 30-year is 4 basis points, almost 4 basis points in the 10-year. So bonds are starting to surge up today. The price of all the long bonds are starting to surge up today. It shows right now the only one they're buying is short-term debt, 3 months. What that should tell you about investors right now is they are scared. They don't want to buy. They don't want to buy into anything long term. So all the long term yields are rising, and today the short term yields are falling. Shows you investors are scared right now. Let's take a look now at the dollar index. We're looking at 96.45 today on the dollar. I'll tell you. What was this article? Oh, yeah, it's a Business Insider. Anyway, they won't let me in unless I pay a subscription price, I think it is. Tried to go there, Let me just go there for a second and see what they do. See if they try to charge me for a prescription. No, I guess they're going to let me look at the article here. The Fed just said it contributed to the stock market's wild ride in December. So yeah, see, they're admitting it. The Fed is admitting that they're causing problems in the market, That's kind of a first, really, the Fed admitting that they're causing problems in the market. Anyway, we have huge problems coming up next month. Brexit is something to really keep your eye on. And there's still no solution. And it's almost the end of this month. We only got 1 full month left. Just a few days in the end of this month before Brexit comes to a final conclusion on the 29th of March. And the question is, will they or won't they? Every day they trudge by, they haven't found a solution yet. It looks to me less and less likely that they're going to find a solution to this thing. And what is the immediate danger of the Brexit? I don't think anybody's going to starve to death. A lot of people in Britain are buying extra food and everything else. I don't think that's going to happen. I think they're going to wake up the morning after it happens, and they're going to walk out their door, and everything's going to just be normal, I think what they're going to actually see is they're going to actually see a slow cost, not rapid, but a slow increase in inflation in Britain. And they're going to see the pound lose a lot of value if it goes through with the hard Brexit, and that's going to be the actual result. But ultimately, I think Britain will be in a better spot if they take their medicine now. And this is the way, with countries. In fact, if they take their medicine, like back in 2008, If instead of papering over the crisis, if we had taken our medicine and had a deflationary depression, by now we would have been booming, except the Fed had to step in and bail out all their banker buddies, and nobody ever went to jail for that. Listen, thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye, guys.